Hello, chart watchers, and welcome to this Tuesday, January 30th, Market Watchers live show with your hosts, Tom Bowley and Aaron Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Very interesting action in the market today. We're not used to seeing down markets, but we certainly have them this morning. You got the Dow Jones Industrial Average right now down over 300 points, near the low of the day. The S&P 500 down 27 points. The NASDAQ down 56 points, and the Russell 2000 down about 12 points. So you can see across the board weakness. We saw a gap down at the open, a little bit of an attempt early at a rally, and now we are starting to roll back over, especially on the larger cap in Dow Jones and S&P 500. 10-year Treasury yield, however, continues to move higher. We are up today about, a little bit more than 1 basis point, sitting close to 2.71%. Despite a little bit of uptick in the yields, utilities are leading the action today, up slightly, but it has more to do with them being defensive than the fact that 10-year Treasury yield is higher. Normally, we would see utilities move in the opposite direction. Consumer stocks are relatively strong, considering all the weakness that we're seeing around the major indices. The XLY, you can see down today, but on a relative basis, outperforming. The gambling index is trying to hold above the flat line from yesterday. This is a group that's been down quite a bit the last couple of days on the sexual harassment allegations against Steve Wynn. And of course, Wynn Resorts has been taking a pretty big hit, but gambling, after an early move lower, has actually rallied a bit today. Healthcare is in the news today, though. This is the group that's getting hit along with energy to the downside. And we're going to talk about it in just a little bit, but the healthcare providers really taking a hit on some news, a little bit of a partnership between Amazon, Berkshire, and JP Morgan, talking about trying to manage their healthcare costs and setting up a new company to do that. And as a result, many of the healthcare companies getting hit. You can see two examples here. One is Express Scripts. This is a drug distributor, and the stock was really down quite a bit at the open today. I think it was down close to 10%. Has rallied back some, but still taking a big hit on the day. And one of the big managed care companies, Cigna, you can see also taking a big hit on the news. And with that, I will bring in my co-host, Aaron. How are you doing this morning, Aaron?
I'm sorry. I'm doing quite well today. I hope you can hear me okay.
Yeah, we got you fine. It's an interesting day. I mean, we haven't seen a day like this in the market in quite some time, with the Dow Jones down over 300 points. I mean, what do you make of it so far?
I think it's been long overdue, but I wouldn't be surprised to see everything move back up. I mean, you can see the NASDAQ's already making some moves back toward positive territory. We keep getting these big down days, and then the next thing you know, by the end of the day, it isn't a big down day after all. So,
well, one thing that's really interesting is we've got the volatility index up another 7.5% today at one of the highest levels we have seen, actually the highest level we have seen since back in August. So yes. Definitely expected volatility picking up today. I'm sure we'll talk about that some more as the show goes on.
Absolutely. And I definitely am going to show that VIX chart that I have, because interesting information there today. So I'll be sure to give everybody a look at that.
Awesome. Well, I know we got some big news coming up. I know your dad's going to be joining us tomorrow. Why don't you go through all the announcements and so forth, the agenda, and we'll get started.
All right. Well, yes, my father, Carl Swinlin, will be in tomorrow to talk Decision Point. I know already we're going to look at some equal weight versus cap weighted ETFs, the gold premium and discounts. So it'll be great. Bruce Fraser's here. We'll talk some more Wyckoff on Thursday. And then Friday, I'm going to be doing my workshop on sifting scans, not shifting sands, but sifting scans. I'm going to show you, when you get all those results, what the heck to do with them. And so that's going to be for our weekly schedule. I did want to just drop in an interesting thing, though, is that tomorrow morning, I should say, at least here about 5 a.m., it's going to be a super blue blood moon. So you have something that hasn't happened for 150 years. I know here on the West Coast in LA, it's going to be about 5 a.m. Going to get a super moon, a blue moon, and a total lunar eclipse on my birthday.
Wow, it sounds like the frequency of that is about the same as the Dow Jones down 300 day.
Yeah, exactly. All right. So with that, today's agenda, we've got a lot to cover, so I won't take too much more time. Everything stock charts. Bill Shelby's in here. We're going to talk tech scans. And then we have correlation that we're going to look at. Tom's going to go through some of his 10 and 10 to 1. First symbol will be Rio Tinto, RIO. And then finally, we'll finish off with one of our favorite segments, What Would You Do? So I'm not going to give anything away now, but you might want to go look at the symbol UNH, United Healthcare. All right.
In a way.
Yes. But I'm not giving away what we would do.
No, I'm going to give that away. But it's interesting because UNH is in that healthcare space, which is getting hit pretty hard today. So it'll be an interesting discussion for sure.
Absolutely.
All right, let's go ahead and take a look at what's going on today so far. First, you can see the 10-year Treasury yield over on the far right-hand side. You know, we just continued to move higher. It's been a really big move up in the 10-year Treasury yield here in January. And the Fed began its meeting today. So tomorrow we will get a policy statement out of the FOMC. And it'll be interesting to see what they talk about. I imagine they're going to start to get more hawkish given what we're seeing in the bond market. A lot of selling there. And so I think they're going to be looking for maybe more rate hikes or hard to tell. But we'll get the news from the Fed tomorrow, and then we can move forward from there. In economic news today, we did have the November Case-Shiller Home Price Index out. It was a little bit better than expected. It rose 0.7%. The market was expecting 0.6% rise. And then at 10 a.m. this morning, January consumer confidence came out, and it was better than expected, 125.4, and the market was looking for 123.6. So I thought I'd bring up the S&P 500, and let's switch over to an intraday 10-minute, 5-day chart. You can see right at about 10 o'clock when that consumer confidence report came out, that's when we did see a bounce back up in the market, but it didn't last, and you can see we're starting to roll back over again. And we could, zoom out into different time frames. But if we look at the hourly chart, take a look at what's been going on, not just with the S&P, but all of our major indices. You can see higher prices, lower PPO readings. That's a negative divergence. And what I look for at a minimum is a move back down to test the center line, the PPO center line, and then also a move down to test the 50 period, in this case, the 50-hour SMA. So far, we've gotten that. Now, will this extend and grow even deeper in selling? Well, let's move out to the daily chart. On the S&P, you can see anytime you get the PPO rising like this, what I look for on pullbacks is for that rising 20-day EMA to hold. And you can see that with the exception of one day in mid-November, we have been trading above this rising 20-day EMA since the end of August. So that would be pretty critical pullback if we were to fail to hold the 20. But that right now, that level is sitting at 27.92, and the S&P is at 28.24. So we still have a little bit more than 1% just to get a normal 20-period test. Anytime I see whether it's an hourly chart, a 10-minute chart, a daily chart, a weekly chart, when I see the PPO for that period rising like this, I expect to see that rising 20-period EMA hold. And so that could be a very interesting upcoming test if we manage to get back down that far. Again, we haven't really seen, we've gotten close to that rising 20-day, but we haven't seen a test of it since probably right around the Thanksgiving holiday or just before it. So we're talking about 2.5 months, maybe even, probably a little bit more than 2 months since we've seen that kind of a test. So something to keep in mind and something to watch. Okay, big news out this morning. Amazon, Berkshire, and JP Morgan announced a partnership. They're forming a new company, and what they're trying to do is to address healthcare for their U.S. employees. So the aim here is to improve both employee satisfaction and also to lower costs at the same time. So they're planning to do this through this new independent company, and they said it's going to be free of profit-making motives and constraints. So pretty interesting, different approach to trying to provide health care for employees, not only at lower cost, but also trying to improve employee satisfaction, because it's pretty easy to lower costs. There are a lot of different plans, but usually employees aren't very happy with those plans. So it'll be interesting to see what they come up with, whether or not this is going to be something that other companies try to migrate to. But whether this is just a one-off and we just see these three companies do it, or whether this is the start of something new, a lot of the healthcare companies are not reacting very strongly to this news at all. In fact, we are seeing a lot of negative impacts. So first, let's take a look at the Dow Jones U.S. Healthcare Providers Index. This is the DJUSHP, and you can see the group was on fire until this announcement came out. And first thing, we've gone back down. We've tested this rising 20-day EMA, and I do think a lot of the stocks in this group continue to be pretty strong technically. We were way overbought. You can look down here at the RSI. You can see that the RSI had reached almost 90 on this index, and we've seen that kind of an RSI on a lot of different areas of the market. But this pullback all of a sudden has brought the RSI back down to 60 very quickly. And if we can base down in this area, we may see that RSI drop even further into the 50s, maybe the 40s. And during an uptrend, that's not usually a bad time to get in. So huge move to the upside, very little selling. You can see a lot of hollow candles, meaning that we are closing on highs, opening on lows of the day, closing on highs. That's what happens when you get mostly a hollow candle with very little tail out either side to the top or the bottom. And so I think the DJUSHP has been very strong, and this news may actually provide some opportunities to get into some of these individual stocks in the area. I do want to point out, let me pull up my blog from this morning. For those of you who like the historical slant and some of the history of the stock market, you might appreciate the historical tendencies area that I posted this morning. But just like, we talked about in October, where we said the end of October, November, December, and then the first half of January are the best 3 months of the year, roughly. Well, the 30th, the 31st, the 1st, and the 2nd are the 4 best days of the month when you put them together. Very, very strong action beginning on the 30th of calendar months and running through the 2nd. 28th to the 6th, or even the 26th to the 6th is overall a bullish period. But as you're ending one month and beginning the next month, you can see that these are the annualized returns on the S&P 500 since 1950. That's a lot of days. And you can see the 30th through the 2nd has annualized returns that continue to strengthen as we get ready to open up a new month. The 30th is just a little bit better than average. The S&P 500 over this period has averaged 9%, a little bit more than 9% per year. But you can see the 30th at 12.87%, the 31st at 29.99%, the 1st and the 2nd, 46.8%, 38.09% respectively. And if you look at the NASDAQ, the numbers are even stronger. The 30th, a little bit less at 10.61%, but then you can see the 31st and the 1st, really incredible returns going back to 1971 when the index began. So 48.75% on the 31st, which is tomorrow, and then 60.75% on the 1st, which would be Thursday. Now, keep in mind, I'm not talking about January 30th, January 31st, February 1st, February 2nd. They are bullish days, but I'm talking about all 30ths of the month, all 31sts of the month, 1st and 2nds. So this would be January 30th. Of course, there is no February 30th, but it would be January 30th, March 30th, April 30th, May 30th, and so on. Money, what happens is money tends to come in at the beginning of the month, and the market anticipates that money coming in, and you start seeing a lot of window dressing. You see portfolio managers buying ahead of that money flow that comes in, hedge funds. I mean, there are a lot of folks that know that this money flow can create some great opportunities heading into the end of the month, and we typically see the action heading higher. So it's kind of strange today, actually, to watch the market behave the way it has, at least in the early going. Now, the S&P 500 during this period averages going up about 60% of the time. Throughout the entire year, the S&P, and this is dating back to 1950, the S&P has gone up about 53% of the time. So these 4 days, the odds of having an up day go up. But notice I'm not saying 100%. 60% is not 100%. They don't go up all the time. But this is the time of the calendar month as we head into a new month where we do tend to see the markets rise. So I just wanted to throw that out there because we're having one of the biggest declines that we've seen in the market on the 30th. And I think it's going to be interesting to see with these next few days whether or not the new money coming in the money moving out of bonds, depending on how the Fed meeting goes and what they have to say tomorrow at 2 o'clock. It's going to be really interesting if there's a sell-off in bonds. You get all this new money coming in, and it comes on the heels of a pretty nasty day so far today in the market. Will the market rebound? So that's a question, I guess, for another day. A couple of earnings news, a couple of stocks in earnings news. Let's take a look first at Pfizer. Pfizer came out, had a great report. 13.7 billion in revenues. The market was only looking for 13.61 billion. They also posted earnings of 62 cents versus 56, and they guided their EPS higher and their revenues above the midpoint going forward. And what did all that get them? About a 2.9% drop, almost a 3% drop today. But after a really nice breakout here, I expect this rising 20-day moving average to hold. So I think Pfizer could actually be providing some opportunities here on this pullback. We have Merck, MRK, reporting on Friday. So another big name in the space. Be interesting to see how that pans out for the group. But looking at the Dow Jones U.S. Pharmaceutical Index, which is the $ DJUSPR, if we pull this up and then go back and look at a weekly chart, you can see the daily chart, we were getting a breakout. But look at this breakout on the weekly chart. So this pullback getting close to the rising 20-week moving average, which held on the last couple pullbacks. This is going to be a really interesting group as we go throughout this week. I think that this breakout is very significant, and I guess time will tell whether or not that's the case. And with that, we do have a special guest in here today from Stock Charts. We got Bill Shelby in for Everything Stock Charts. How you doing this morning, Bill?
Good. How are you guys doing?
We are doing great, and we're going to be doing even better because you're going to tell us some things about scanning. At least that's what I've heard.
Yeah, let me go ahead and get this screen shared here. Okay, so are we up and running? Okay. So what I'm thinking about doing today is a quick just scanning tutorial. Scanning is a huge area, so we can't begin to cover the whole thing, but we figured I would just go over some really basics. Last time I was on, we talked about the predefined scans, which was a nice way to sort of dip your toe into it. We're going to go a little bit deeper and just sort of do an introduction to the advanced scan UI. We'll talk about some of the tools in the UI, such as the scan builder, that will help you build your scan from scratch. And we've got a couple little ingenious ways to use the comment feature of the scan to sort of create a multi-dimensional scan. And it is a very technical area in some aspects, so it takes a little bit of time to kind of get your head around it, to learn the language of the scan engine so you can get it to do what you want. So we'll go over a lot of the help options because there is a lot of help out there for this topic. So we'll jump right in and start to work on our scans. First thing I'm going to do is get to the advanced scan workbench. We can go to our control center here on our members page and just click advanced scans. And we'll get the basic scan UI, which is mostly this area here where we can put all of our criteria, allows us to author all of the clauses and the ideas and things we want to try and show the scan engine to tell us to find the stocks that we want. We've got some controls here that let us pick which day. Most of the time we want today or yesterday, but we can go back in time. We can choose whether we want to run this scan against the current data intraday or against the last close. And then we've got our section down here, scan components, that'll help us build our scans. We've got all sorts of options down here. Candlestick patterns. We've got PNF patterns. We got the basics, candlesticks, blocks. We've got all the technical indicators you can throw a stick at. We've got industries and sectors and all sorts of things. So tons of things to do there. But I thought I'd start out is to just come up with a simple scan and kind of say, well, we want to find interesting things. That's what the whole scanning is about. So maybe we find scans or find a scan that will give us stocks that are performing well. And so I just came up with a simple idea of like, okay, well, let's take a look at some of the sectors. This is an area Tom likes to look at, I know. And maybe we say, well, we don't need to necessarily scan the entire market and then find a sector that's doing poorly. So why don't we just look for the sectors that are doing the best and just sort of ignore the sectors that aren't really doing as well? So maybe I go out a month. I tend to trade on a little bit longer time frames, so a month is sort of a good point to sort of select for timing. And I'll maybe just pick the top 3. I'll say, okay, so last month we've got cyclicals, and despite today's performance in healthcare, they've been relatively strong, and financials. So maybe I just pick these 3, and I'm not going to worry so much about some of these others. Over time, if you want to pick the top 2, the top 1, top 4, you can sort of edit this to what works for you. But I'm just going to pick the top 3. I'm going to make a mental note here that the percentage change over the last month of these guys, looking about 8-9% in the last month. So I'll use that in a little bit. So what I'm going to do is go back, and I'm going to erase the basic intro scan that it gives us, and I'm going to just start putting something together using our sectors and industries. So I'm going to come down. We've got choices of US or Canadian. I'm going to choose the US. So we had cyclicals. I'm going to click the add button. That gives us our cyclical sector. And then we had financials. And we had healthcare. Oops. Healthcare. All right, so I'm going to pick all of those. I'm going to do a little edit here. And since I want to use all of them, I'm going to change these to use the word or. Like I say, we'll get into a little bit of this extra detail in just a minute. So if I just run this scan right now, what I'm going to find is all of the symbols that are in these 3 sectors. And that will be a lot. And we probably don't have time to go through that many and sort of search to see what we want. So at this point, we can sort of start to think, okay, what sort of criteria am I going to look for a good stock? So we looked at that percentage number earlier, and there's a percentage change technical indicator we can use. Click that, add it. And what percentage change is basically what our sector and industry page would show us is over the last N number of trading days, how much has this value, which is the close, changed in terms of percentage? So what this is going to say is find everything in the last 10 trading periods whose close has gone up more than 10%. But I want to sort of keep to that 1 month value we had before. So I'm going to change this from 10 to 22, roughly. It's a rough number. It changes every month, but it's roughly 22. We're not looking to go absolutely to the day. So I'll just put 22 there. And our value what we had on the average was about 9%. So let's look and see for things that are outperforming. So this will show us all the things that are in these sectors who have changed over that 1 month period more than the industries themselves or the sectors themselves. So we're going to try and find things that are outperforming their own sectors. So we can hit the check syntax button. It'll come back and says that we've got everything the way we want. And we'll just run our scan. And we've got 726 items. So that's, for me, is a lot. I don't have the time to go through all those things. So we need to find ways to sort of pare those down. So we can start adding some additional clauses. One of the things I like to do is look for items that are a little bit higher price. Some of the lower priced items on mutual funds aren't allowed to buy things, say, below $10. So I'm looking for some institutional support here. So I'm going to say I want to see things that are over $10. And I don't really want thinly traded things. So I'm going to say, let's find something with some decent volume. Say, let's go 400,000 shares a day. That's pretty good. We can run that. Now we're down to 118. So we're getting better. And we can continue to add more clauses to this or more ideas that we think will show the best stocks. So Aaron may want to add some decision point indicators. Tom may want to find things that are close to the moving, rising 20-day EMA. Greg Schnell is really into scooters. So maybe we can come over here and say, let's put in a scooter clause. We'll add that. And so this would be looking for scooters above 90, which would say, let's look for all of those things, but some add to those or restrict our list to those which have been sort of in the top 10% of the performing items over the last several months. So that gets us down to 50. We're getting a smaller batch there. You could also take this scooter, and one of the things Greg Schnell likes to do is say, I want to find things that are just starting to be interesting. So maybe we're going to not look for things that have already at the top, but things that are changing. So maybe we want to say a scooter that's crossed above 80. We can look for that. We can put any of these additional indicators on here. And one of the things you want to do as you build your scan is sort of check your results to see, am I getting what I think I'm getting? So maybe we look at a couple of these. Yeah, last month that was a pretty good stock till the last day or so. So maybe just sort of click around and just do a quick check to see, well, that's a nice big candle. Just see that our scan is giving us what we think we want. And it looks like over the last month, we're finding things that have done pretty well. So we're on the right track. We just need to sort of continue to update and hone this. And it is sort of an art and a science. There's a lot of things we can't write the perfect scan. If we could, I'd have sold it by now and I'd be on a beach somewhere. But I'm not. So it's always a little bit of tweaking. We can say, well, maybe that's too many results. Let's find things that are up 14%. Maybe that cuts us a little bit, cuts our results to something a little bit more manageable. So it's a constant sort of ebb and flow. You're kind of tinkering. If you play with it for a while, you'll start to find values that are okay for you, and it's different for everybody. So you just kind of have to dive in, play with the dials and switches, and just eventually find something that works for you. I mentioned comments. One of the things that you can do is you can put in either 2 forward slashes or the hash key or the pound key, depending on how you want to call it. And what this will do is just ignore everything on that line from that point forward. So what you can do with this, if you wanted to use this scan, if you saved this scan, it would be sort of tied to these 3 sectors. But if you come back to this scan in a month, maybe those 3 sectors have changed. Maybe the top 3 are now technology, energy, and something else. So what you can do is, if you wanted to, is you can put all of the sectors in here. And I won't do all of these. I'll just let that exercise to the reader. And then if we don't want to run that, we can just simply put our comment in front of it. So we could create this scan and save it and include all of the sectors and then just turn on the ones we want. Then we can run this and we say, okay, well, maybe healthcare is a little iffy today, so I'm going to turn it off and see what we get. Well, that cut out a lot. So you can turn around and you can use these comments to turn on or off different aspects of the scan. So you could have, again, if you wanted to check, say, a PMO or a rising average or a scooter, you can put those into the scan and just selectively decide which ones you want. You say, well, maybe I don't want scooter today. I'm going to turn off the scooter and see what happens. So that's a way you can use comments to sort of selectively create what I would call sort of a multi-dimensional scan, because you can easily save one scan and have it be multi-purpose with just typing in a couple of lines to turn on and turn off various pieces. And like you mentioned, there is a lot of complexity to this. I would say it's well worth the time. I think if you talk to anybody who's done a lot with scans and has gotten to use them, they will tell you this is a hugely beneficial thing to trading. I use this all the time, not just because I write it, but before I even joined Stock Charts, I use this quite a bit. So it is worth the time investment. And there are, down here, a lot of ways to get help. So we've got an instruction set here that will take you through the user interface, a little bit more detail. We've got a video. This will just show you all the pieces like I've sort of glossed over. There's a lot here. We've got examples on how to write those scans that I was talking about, these scan clauses, what they mean, what all these brackets and braces are, how to include and exclude various pieces of the technical indicators that you want, how to include chart lists so you can add chart lists. Like I know Tom pays attention to earnings for stocks that have beat top line and bottom line. He can put all of those into into a chart list and then run scans against them to find out the best of the best.
I do that all the time.
Yeah, it's very useful. It takes a little bit of investment in time, but it's well worth it. We've got some examples, especially if you're starting out. We've got our predefined scans like I talked about last time. These are a great way to start learning. We've got some sample scans to teach you how to sort of get into the whole process. And finally, if we go back to our writing scans in our support center, if we go back up a level to technical scans, we'll get a larger overview. We've got all sorts of links here on writing scans, troubleshooting, and our support team just revamped our entire tutorial section. So what I've done is just a little one. We broke our huge one that I think I wrote 7 years ago into 8 small ones. So these are nice bite-sized little pieces that'll run you through a very specific piece of a larger, what you would call workflow of how do you write a scan, how do you save it, how do you run it. I know Erin was talking about sifting scans. So she's going to be talking later in the week about how do you go through all those results that we got. Maybe there's too many. How do you, once you've got them, what do you do? Some of these tutorials will help you go through that process as well. So that's just a tip of the iceberg. In fact, I would almost say that's just the frost on the tip of the iceberg. But that's a little intro into how to start writing your own technical scans.
Is there somewhere on the site, Bill, that you would recommend if somebody wants to learn more? I mean, just go into Chart School?
Chart School or the support center that we just looked at. That's a great place to go through that. Look at the video, look at sample scans, because it's like learning a foreign language. You know, you have to sort of learn the syntax of the language. You have to learn, how do I take what's in my brain and write it in this thing such that this engine understands what I want. It very much becomes a do what I mean, not what I say. Because if you tell it to find something that's impossible, it will duly go out and find nothing. So you have to sort of realize how the scan engine thinks. And so that's probably the biggest time commitment it's going to take. But you can come down, like say we were talking about the predefined last time. This is a great example as well. So you can find some of the predefined scans and add them. And sometimes it's a very quick little one-line piece here, how to use different dates. And sometimes added that one. So sometimes you can get some of these predefines that are several lines of code. I'm not finding one off the top of my head here. But looking at those, how they're written, will start to give you an idea of how do I deal with time? How do I find something that was a low value 2 or 3 days ago, but it's a high value now? How do you use time? How do you use these expressions and crossing lines and whatnot? So there are a lot of examples, and the best thing to do is just sift through the examples and just play with it. You can't break anything.
Yeah.
I do have a couple questions if you
Sure.
wanted. One of them is that if you're scanning on volume, for example, what you have there greater than 400,000, is that average volume over the period that you're scanning?
No, this happens to be just today. It would be today's so far, or it would be yesterday's. What you can do, if you wanted an average, you can do, I want the simple moving average over the last 50 days. Actually, what do I do? And I would say, so that would give me a simple moving average. And that's my own scans. I do that. I find like a 40 or 50 day moving average of the volume. I'm looking for consistently high volume, not things that are really heavily traded one day and then they sort of drop down to nothing for a while, then they spike up. So I'm looking for something that's consistent volume because I want to be able to get in and out. I don't want a lot of swing on the bid ask. I want to be able to find something that's fairly liquid.
The other question was, and it's on that next line, when you do a crossover like that, does that give you the cross up above 80 and below 80, or is it just one or the other?
That's the cross above. And so what this means is let me know when the scooter goes above 80. There is no cross below, but what you do for the cross below is to just reverse the order. Because if something goes above something else, then by definition, the other thing goes below the first. So sort of easier to draw that on a piece of paper and say, well, if the blue line goes above the red line, then the red line is actually going below the blue. So you just switch the order. So that's how we do crosses below.
All right. Yeah, that was the question. And I know I've got somebody in here that says they really want to do a stock with new 20, 50-day moving average crossovers, but I think that's pretty much you can just go into one of these predefined scans. And
right. The predefined scans have a lot of these. We've got our basic 50-200 crossovers, our golden cross or our death cross. We've got MACD crossovers, a number of things here. So we've got maybe 20 or 30 of I believe there's about 70 in the predefined scan page. And we've probably got 20 or 30 of them here. So this is a great way.
So if you pull up a bullish, bearish 50-200 crossover, you could just put in 20 and 50 in there instead.
Sure, and that's the nice thing about the scan builder. Until you get really familiar with all of these, and I'll just kind of go back to zero here. Until you get pretty familiar with the parameters, if you just click what you want and hit add, it will give you the sort of the default values. And then you can go in and say, okay, well, I want to do a PMO, but I want to maybe go a little bit shorter. I'm going to go 25 and 15, and you want to change your MACD or your PPO numbers. Just use the builder to get the basic, and then just go in and tweak the dials to whatever you want. Because the advantage of the advanced over the predefined is you can change virtually anything. There are literally billions of combinations of things you can do.
All right. Yeah, and by the way, I would never change my PMO.
All right. Well, I'll go in there and make sure nobody can do that.
Yeah, right. No, of course.
Bill, I saw when you did the scan and you kept narrowing down and narrowing down and narrowing down, you came up with ALV. So I just want you to know, no pressure or anything, but I just closed out everything in my portfolio and put it all in ALV. Is that okay?
Well, if you did it yesterday, I would say yes. I would say it's a good thing you put your mortgage into that bad boy, because that's doing a bit of jumping.
Of course, we're kidding. I don't want to be responsible for anyone out there.
No.
Actually, it is interesting, though, that you came up with that one, because it's in the auto parts space, and that is one of my favorite industry groups right now. It's a group that broke out, I guess, maybe back in August or September above some sideways consolidation for a few years, and it's been a pretty strong group. And I don't know if they came out with earnings today or what that is. I didn't follow it today, but that's a huge move higher so far today, up over 7%.
Well, I'm sure Erin will get into this, but on her talk on Friday is that once you do get the results, there is some more work to do. It is definitely not the case of this satisfied my scan, so I'm just going to go out and buy this, because you'll find things that technically satisfy your scan, but you look at the chart and you go, that's not really quite what I'm looking for. Sometimes that means you need to tweak your scan. Sometimes there's always going to be something that's not exactly what you want. So you do have to sort of take this bucket and then do a couple of refining passes.
Mm-hmm. Yeah, another thing too, when you get your scan results and you show it in that summary form, where it has, you can look at the sector and industry group like you have there with ALV, there's your other. You can sort that by sector or by industry. And find out, based on the scan, the criteria that you're using for the scan, you can see which sectors and industry groups also kind of fit in there, which I think is very interesting as well.
Yeah, a lot of times if you sort by this, you'll see things clumped, and then you start to see, wow, biotechnology, look how many of those there are.
Mm-hmm.
You start to get a feel for, okay, that's an area within healthcare that's doing better. And maybe you want to, say we can, not only are all of the sectors here, but also industries are here. So if we really want to say, okay, I'm going to go a little bit more narrow in scope, I can come down and say, okay, let's just add biotechnology. So you can pick any of those. I sort of chose a wider net, but if you really get into a specific area that's really hot, you can narrow this as much as you need.
Somebody was asking too if you can do scans on. I'm pretty sure you can't do Renko charts, but relative. Could you do, for example, let's see, what did he say here? Of course, now I can't find it, but
I think it was a relative performance, like stock versus sector.
Yeah. Yes. There's not an easy way to do that in sort of the general thing. That's why I went to the sector summary and sort of manually got the number that we were looking for, that 8-9%. There's no way right at this point to say, show me everything that outperforms its industry, and just have the scan engine go figure out, oh, this thing is in this industry. So I'll go get the DJUS HP and figure out what it's done and see if this is above or below it. So there's no way to do that yet. So you kind of have to do a little bit of that manual. Go out and see what the sector or industry is you're looking at for that time frame and see what its percentage change is. That's why I use that percent change, and I'll go to the sector summary and kind of see what's going on there.
Awesome. Well, it's always a pleasure to have you on the show, Bill. I mean, Bill is the creator of these scan engines. So if we have questions on scans, this is the guy. But it's always a great time having you on the show, Bill.
Thanks.
All right, there he goes. And great segment. We always get a lot of requests for scans, Aaron. I know you have a workshop coming up on Friday to help folks, sift through the scans and so forth. And that'll be very interesting as well. And always gives you something you can kind of take away.
Right. Exactly. So it is, because sometimes on some days, I can get about 50 or 60 results to my scans, and you can narrow it down like Bill was showing you, and change the settings to get less. But even when you do that, sometimes you have so many. And so using my particular trading style, I'll be showing people how I sifted.
Awesome. All right. Well, let's keep moving on. We do have correlation coming up. We wanted to talk a little bit about this indicator. I use it from time to time here on the show. And I think if you read blogs at Stock Charts, you'll see that a bunch of the authors do use the correlation indicator from time to time. So what I want to do is, let me go ahead and show you my screen. Right now, I just have the S&P 500 up on my screen. But what I wanted you to do is to go down below, and under the indicators, if you scroll down, you'll see correlation. So this is the indicator that I'm talking about now. And I'll give you some examples of what you can do to use this correlation feature. So let me first go back up here, and let's pull up a few charts. No, that's not the one I wanted. Okay, the first chart that I have is Starbucks. And so this is a 10-year. I think all of these charts, by the way, are going to be 10-year weekly charts. I'm not really overly concerned about trying to find a specific price on the chart. I know this is probably coming up very small on your charts. Don't worry about that. This, you can see the direction here of Starbucks. Behind it, I have actually put in the price of coffee. So you've got Starbucks moving up, and then you can see what Starbucks has done based on how coffee prices have moved. And then down here toward the bottom, I have this correlation. And the correlation is Starbucks versus coffee prices. Now, when you get correlations above 0, that means that they're heading in the same direction. The price of Starbucks stock and the price of coffee are heading in the same direction. When you get readings below 0, then they mean that they're moving in opposite directions. Now, this is a bound indicator, so you can only go to +1 or -1. And that's the entire distance. If you are at +1, like you can see Starbucks and coffee were back in late 2010, early 2011, it means that the direction is they're going hand in hand in the same direction. You can see that the price of coffee was going up, and so was Starbucks stock. And you can see really off of the bear market lows at the beginning of 2009, as demand picked up for coffee, it was also picking up for equities in general. And so for a couple of years, we saw positive correlation. Now, for me, the common sense when I look at this would be that if coffee prices go down, that should be beneficial to Starbucks because obviously one of their biggest expense items, the cost is going down. I don't remember Starbucks, and I've been going to Starbucks a long time. I don't remember them ever saying to me, Tom, we've lowered the price on your latte or on your coffee or whatever today because we just got to cut on coffee prices. That doesn't happen. When coffee prices are going down, that tends to benefit their bottom line. So, when you go past 2011, over the last 7 years, you can see that mostly what we've been seeing is an inverse correlation, meaning that as prices move lower on coffee, the S&P goes higher. Did you have a comment, Aaron?
Oh, no.
Oh, okay. I thought I heard something, but it may just be something crackling on my internet or something. Okay. So Starbucks, you can see over the last 7 years, has been actually moving in opposite direction of coffee prices. You can see that pretty clearly, that as we move down, for the most part, you can see that the price of Starbucks stock has been moving higher. So that's one example of correlation. Now, I have some others, and I'll go through these a little quicker. Next up is Freeport-McMoRan. Now, this is a company that obviously deals a lot with copper. So I thought, okay, well, I'm going to put the stock price in here, and in the pink underneath, I've laid the price for copper. And notice these two almost go hand in hand. And when you look down here at the correlation, see we're above zero almost the entire time, and we're very close to 1. So if you have a pretty good feel for copper, then you probably have a pretty good feel for which way the price of Freeport-McMoRan is going to head. Now, I was looking at this, and as I see copper every once in a while break below price action, usually it catches up. FCX will actually catch up to the downside. And right now, we actually have copper moving up faster than the price of FCX. So just based on a very quick analysis, maybe it makes sense that FCX, based on copper prices, is a little bit undervalued, even though it has had a nice run up over the course of the last several months. But anyway, that's another example of how you can use this correlation indicator. How about gold and the dollar? Okay, here are gold prices going back over the last 10 years, and here's the dollar laid below in the pink. And notice down here on the correlation, mostly, not all the time, but mostly we are in negative territory, and quite a bit of time when we're in negative territory, we're down near -1, which tells us that gold and the dollar tend to move in opposite directions with one another. So you can do this correlation with anything, anything that's priced, any of the securities, any of the industry groups, commodities, whatever. If you think that there should be a correlation or you want to just test your theory, you can do it using the correlation indicator, which I think is a great tool. Here's the S&P 500 relative to the German DAX. So I've laid the price of the German DAX in pink underneath the S&P 500, and you can see visually that they tend to go pretty much hand in hand. And if you look at the correlation indicator, it confirms it. We've seen a little bit more choppiness in recent years, but overall, I think it's pretty clear that these two tend to go hand in hand with one another to the upside. Now, the next chart might surprise you, but I always like to use this. This is the S&P 500 with the China market, the Shanghai composite underneath. And you can see these two do not go hand in hand. And in fact, when you go down here to the correlation, you're going to see all kinds of movement. There may be a little bit more movement, a little bit more positive correlation than negative, but there are many periods where you see negative correlation. And what this tells me is that I probably shouldn't weigh the data coming out of China at nearly as much as what's happening over in Germany, because the correlation between China and the US is not nearly as strong. I mean, this is going back 10 years, but I could probably go back 20 or 30, and you'd see the same thing. It's just not that tightly correlated. And our markets are different. Our political environments are completely different. And so I think that when you see on CNBC or on a news channel that the market's in trouble because something's going on in China, I tend to just ignore it, because I know, based on history, that the two markets really don't correlate that strongly, positively with one another. It's much more important what's going on in Germany for me than what's going on in China. And that may change over time. And perhaps that's what we're seeing over the last few years. Maybe we're starting to see a little bit more of this positive correlation with China. But history tells me to be careful making that assumption. Let's take a look at the S&P relative to crude oil. So if crude oil does something, does that have an impact on the S&P? Common sense might tell you, well, if crude oil prices are going down and I'm paying less at the pump, then that means I have more money for other things that I can spend, consumer items and so forth. So maybe the S&P would do better when oil prices are going down. But what I'm here to tell you is that's really not the case. That crude oil, when it goes up, it tends to go up with the S&P 500. You can see from 2009 through 2013, there was a pretty tight positive correlation. And when oil prices took a tumble back in 2014, 2015, the S&P stopped moving higher. It wasn't exactly falling, but the huge ascent that we had stopped. And what I draw from this is that, when you're looking at crude oil prices, they're going to move based on global demand. So if crude oil prices are moving higher, it's telling us that there's more global demand for oil, which also leads to the thought that, well, maybe global economies are strengthening. And if that's the case, then that should help the S&P 500. So I think the two have a pretty strong positive correlation. And then we go on to the S&P 500 relative. Now, this is the XLY, XLP ratio that I like to look at, which is the consumer stocks. So this one is the S&P 500 versus consumer stocks. And this is why I love this ratio. As you can see, there is a very, very strong positive correlation down here between the direction of the XLY versus XLP, just the ratio of how those consumer stocks are performing, discretionary being the XLY and staples being the XLP. And as we move higher, it's telling us that folks are more interested in investing in consumer discretionary stocks, which are the more aggressive area of consumer stocks. And so anytime the risk appetite is higher, that tends to be very good for the current bull market, but for the S&P 500 in general. And you can see that there is a very tight correlation between these two. They tend to move in the same direction, which I think is really important. In fact, we actually had a positive divergence. You probably can't see it on your chart there, but this ratio actually bottomed before the S&P 500. Money started rotating into the more aggressive area before we got into the bottom on the S&P 500. I think that was the last one. So just to summarize on correlation, first of all, I think it's an indicator that you can kind of play around with. If you have some ideas about what might correlate with something else, I think it would be, a good exercise to go through it. It can provide you some great trading opportunities. For instance, if coffee prices are dropping, you can see on that chart that tends to be a very good thing for Starbucks over time. So anyhow, these can definitely give you some really good indications of comparing different areas of the market and looking for certain things based on history. So with that, I'm going to switch over and let's take a look at the 10 and 10 stocks.
All right. I'm going to share my screen first and let everybody look at the RRG of what everybody requested. And here you are. So there's where they land as far as the leading, leading, improving, weakening, and lagging. So I went ahead and looked. We don't have that many at this point, so we're probably going to look at just about all of them. But I thought that was pretty interesting to see where these are all traveling. So anyway, I'll pass it back to you because I have your first symbol, which is RIO, R-I-O.
Okay, RIO. All right, I see a little bit of a flag here. Beautiful move up in December and January. So I think if we annotate here, you can see, first of all, anytime you have any kind of a continuation pattern, what you want to see is a prior trend. So after going sideways for several months, RIO broke out, beautiful uptrend, and now I think there's some sort of consolidation taking place. One definite area that I would continue to watch is that rising 20-day moving average. We got close about a week ago. We're having a little bit of a down day today. So anything down to touch that rising 20-day moving average, and I could draw in some price support. Here we had a little bit of a pause, went down for a couple of days and then broke out again, came back down, came very close to testing that level. So we got a little bit of price support just beneath the 20-day moving average. But I think RIO looks very interesting after breaking out back in December. And currently, I think, is in a bullish pattern. So as long as that price support in the 20-day moving average holds, I would remain bullish on RIO.
All right. Let's see. The next one I have for you is KB Home. And I know we talked about home construction before, but we haven't covered this particular one on the 10 and 10.
Yeah, I actually like this one. This is one that John Hopkins brought up the other day. It had gapped up with earnings. You can see that back a few weeks ago. and pulled back. I thought it would probably hold gap support and the 20-day, but it didn't. Stocks don't always do what we think they're going to do. In this case, it went down through that level and has gone all the way back down to test its 50-day moving average. I like today's candle if that holds up. And the higher it finishes today, I think the better the candle will look. So I would be keeping an eye very closely on the 50-day test here. And that candle, a hollow candle, if it would come back up and close above yesterday's open and move back through, say, the 33 level on the close, I think that would be a very bullish candle, especially with volume seemingly picking up today. So I think KB Homes looks pretty interesting here. If nothing else, the reward to risk has gotten a lot better in the last few weeks. From very overbought, now check out the RSI down at 43. I think this is an interesting stock here at the 50-day.
All right, the next one is going to be AJ. Well, now that didn't come through. Let's try JMLP.
JMLP. All right, Nuveen All Cap Energy Opportunities Fund. Got a little bit of a negative divergence, and we have gone down and tested price support. Perhaps we'll just get sideways consolidation to unwind what looks to me to be a negative divergence. But there is some pretty solid support. We've already come down, tested it once, along with the 20-day moving average. Today, we've traded a little bit below that 20-day moving average. I'm not going to annotate it here, but you can see higher prices and a lower PPO. So we do have a negative divergence in play. I think we might just sideways consolidate and allow that 50-day to come up from underneath. But I do like this chart. I think that the $8.90 to $9 is what I would look to hold. Maybe even $8.80, go down to about $8.80. That's a key area of support, I think, short term. And to the upside, $9.50 is short term resistance.
All right. The next one I have for you is CELG. I think you know which one that is.
Yes, Celgene. It's in my favorite area, biotechs. It's just not one of the better biotechs right now. The biotech index has been rolling. You can see a couple of big gap downs, very heavy volume on the gap downs. We just don't, at some point, Celgene may start to lead again in the biotech space, but it's just not leading right now. So I would avoid this one. I do love the group, but this is not one of my favorites. And it used to be, but that's what happens in technical analysis. I mean, you get breakdowns, you get heavy volume, and things start changing. I think long term, we're talking out a few years, Celgene's probably going to be fine, but short term is what I'm looking for. And right now, I just can't trust the stock. I would say that in the near term, it's just trading in this range between about 98 and 110.
All right. Let's see. The next one I have for you is ASML, semiconductor.
Yeah, this one, this is a semiconductor that absolutely blew earnings out of the water a couple weeks ago. And I think it's just consolidating. I expect it's going to go higher. I would look for a couple of key areas of support to hold. The first one being the top of gap support right there. I mean, you could go down into this area. You've got a breakout of actually, if I drag this down just a little bit, that is actually the bottom of gap support right here. That's where the close was. And you can see the double top over here. So if we did lose, say, 194.5, 195 in this area, we could drop back down to the 187 level. I'd be shocked if we went any lower than that. And to be honest, I think the top of this area around 194, 195 on any pullback would be a great entry.
All right. See, the next one is going to be Caterpillar. CAT, C-A-T.
Yeah, Caterpillar took it on the chin here after earnings recently. I just think it's so much was built into the price. I mean, look at this chart. It's an absolute thing of beauty. But the pullback, we did have a little bit of a negative divergence on this one. I'll go ahead and just annotate this quickly. But here you can see the PPO dropping. Price action is based on closing prices. So you can see I'm not connecting the top of this candle because that is actually the open. Let me zero in here so you can see what I'm doing. This right here is the open. Here's the close down here. So I'm actually connecting closing prices coming up. And with that, you can see the PPO rolling over, which is negative divergence. That tells me we got a shot at that 50-day instead of holding the rising 20, which has been holding for a while. And so I think Caterpillar could have a little bit more downside, but overall, I still like the chart a lot. And I would probably be a buyer on any further weakness down to that 50-day moving average.
Okay, next one is CORT. And comment was, are you seeing any manipulation on this one with all these? I guess you said there were a lot of gaps on this.
Well, I don't know that I see manipulation. I mean, it's therapeutics. It's in healthcare. I don't know how closely they may be tied to everything going on with that announcement I mentioned earlier with J.P. Morgan and Amazon and Berkshire Hathaway setting up that separate company to try to better manage their healthcare for their employees. I don't know if this is getting tied up, but I mean, we could take a quick look at the 1 minute, 2-day chart. Yeah, all this selling took place right in the first couple of minutes. Volume was heavy. I don't know if there was any errors in reporting prices, whether or not that was truly, if it went down that far. But it has, rallied back and it's starting to roll over again. I have a feeling it's probably going to go lower based on this daily or intraday chart. But getting back to a daily chart, I think a move back down to test that rising 20-day moving average, I think is a buy.
All right. Next one is SHOP, Shopify, I believe.
Yeah, I didn't annotate. I'm just going to put in a little arrow there. That's what I would watch for. And Shopify?
Yes, shop.
All right. Nice breakout. I'd like to see a little bit more volume. You can see on the breakout, the volume was not nearly what we saw in the move to the downside. So I maybe have a little bit of caution here. It would just tell me if the rising 20-day moving average fails, I don't want to take a chance of holding it because I really would have liked to have seen more volume on the breakout. And if I draw this price support resistance line across, you'll see what I'm talking about. There was your breakout. And the volume down here definitely picked up more than what we've seen. So that's good. But comparatively, when you look at how much selling took place from about the 120 area down to $90, this breakout really wasn't that awesome. So I would just say this: it looks good. The PPO is strong. I think as long as it continues to hold that rising 20-day moving average, I'd be okay owning it.
Okay. Next one is AUP.TO for Canada, friends.
AUP.TO.
Yes. And it looks like this one, pharmaceutical space.
Yeah, this is one I would like to see hold the 20-day. It does have a hollow candle here. It had been downtrending, but you can see after breaking back up above that 20-day moving average, it did pull back, and it's essentially been holding the rising 20-day moving average here. You can see it there. You can see it again over here. And now when we move below it, you can see the hollow candle there that is actually, I think, trying to hold on to this support level. I think today's low would be a stop for me. We now have a couple of lows down, I don't know, it looks like around the 660 area, maybe 655. Yeah, today's low 653. I think if we take out these lows, I'd be real careful to the downside. Otherwise, what I would look for is this trend that we've seen so far in 2018 to the upside continue. I want to get the stock back up above that 20-day moving average.
All righty. Let's see. The last one is going to be Ford, F.
All right, Ford. I was a fan of the autos. I really haven't looked at the index lately, but I don't like, Ford came out with its earnings, gaps down below both moving averages. It's lost recent price support, and it's doing it on heavy volume. Even if the autos are holding up, this would not be one of my favorites within this group. Here's an example of the price support that's been lost here. We also had a breakout here, which pretty much was holding as support for a while. And as we moved up, we had a PPO that was advancing, telling us that price momentum was building. And then we put in that reversing candle right at the top. And after earnings, we have been selling off on very heavy volume. I'm just not sure where support is here on Ford at this point, looking back over the last 6 months. I just don't like the way it's performing relative to the overall market and to its own industry group. So I would avoid Ford at this point.
All right. I think that's 10.
There we go.
So here's our 10 and 10 today. Our symbols are listed. I will have these up in the MarketWatchers live chart list. You will find that chart list on the main MarketWatchers Live blog page. So that's where you'll get the link, is to go into the MarketWatchers Live blog. And with that, I think we're going to go into what would you do?
Well, you got your market update.
Oh, my market update. All right.
I know you want to jump in, but we got to get a market update in there, especially on the day like today.
I guess that's true. All right. Whoops. Let me go back to the right place. Hold on just a moment. See, I have it all set up and ready for my... Let's go back here. All right. In fact, I already have it set up. So let's go ahead and look at our candle glance for the market update to start. And as you can see, there we go, get them all on the same page. We're still lower on the day, but it does look like we've found some support. The Dow, not so much. We're still moving lower for the Dow. Excuse me. NASDAQ was trying to make a recovery, but it's now headed back down. So I suppose we're not going to make the recovery I had thought we might by the end of the day, just because that's what we've been experiencing previously. Russell 2000 is flirting with its intraday lows at this point. TSX gap down has been consolidating mostly sideways, but in the negative. Treasury yields up slightly. The dollar made quite a comeback after gapping down, managed to get up to yesterday's close, but has pulled back again. Although it does look like we have a little bit of support again. Commodities lower. They cleaned up about half of the losses they had this morning. And we can see USO gap down, moving sideways, currently reading at $12.89 for USO. Gold gapped up, but has spent most of the entire day moving lower. Tried to make a comeback, but it's back down, ready to test some intraday lows. See, the VIX is rising quite a bit. I'm going to show you that VIX chart shortly. And then you can see that advances are leading declines slightly. Let's go quickly to the market summary. And I think we've seen a lot of what sectors are leading and which ones are lagging. So I'm going to actually, utilities are having a good day. That's the only sector that's in the green right now. Healthcare is the one suffering the most. And we can see, as far as our U.S. industries, utilities at the top. Interesting seeing utilities at the top, since it seems like every day they're at the bottom. But on a down day, looks like utilities are liking that. Paper also in the positive. All other industries on our list are down today, with natural gas and oil services being hit the hardest. Okay, I'm going to take you very quickly to the VIX chart so that you can see what I have been looking at here. And here you go. So these are our climactic indicators. Yesterday, we had some very climactic readings, and interestingly to the negative side, along with a bit of a penetration here of the Bollinger Band, because we are seeing these high readings on the VIX currently. So seeing that, had I seen that at the, had I written about it at the end of the day yesterday, I would have suspected we were looking at a initiation of lower prices. And I say that because, you know, we were still up slightly we were up a lot of the day, but then we fell back down. And so usually I look for rallies off of these lows. And actually, I would have to say today, I might be looking for a rally pop tomorrow, especially if we get some climactic readings here on the net advanced declines and the net advanced decline volume. So I'll be keeping an eye on this chart. If there's anything interesting, I will certainly post it to the MarketWatchers Live blog, or you'll find this chart in the Decision Point chart list. So the live chart list, again, go to the Decision Point blog page and click on the chart list link there, and you will see this chart, and I do keep it up to date. All right, so with that, I'm going to conclude our market update. Did you have any quick comments before we get into what would you do?
Yeah, I want to get over and just take a look at the dollar a little bit. The reason I want to bring this up is there were a couple of really good articles, a couple of good blog articles here at Stock Charts, and I think it's pretty timely. I'm going to first start off with Greg Schnell's article that he wrote just a couple of days ago in his Commodities Countdown blog. And if you go down here, he's making the case that the dollar's in a downtrend. I think everybody would pretty much agree with that we've been downtrending, that we've lost some key support. But he did bring up, kind of taking the other side. And I always like it when you have an article or comments where you're saying, okay, I think it's downtrending, but we do need to be careful about certain areas. And I think what Greg alluded to here was that here's your downtrend. The dollar has been dropping very rapidly since probably around the beginning of 2017, maybe the latter part of 2016. Very few moves to the upside. We've taken out some key support. But he did mention the two tops that had come in back in 2009, 2010 that we broke through that could provide some support. And then also the trend line support. If you go back to the lows in 2011 and then the low in 2014, and they intersect. And just a bigger chart. I actually had done the same chart that he did, but just make it on a bigger monthly chart. Hopefully you can see this a little bit better. But those are the two tops. We broke out. We've now come back down. We've hit that area, and we're testing this trend line support. So I think there's reason to believe that 88 is a very significant support level. And then the other blog article I wanted to mention, this was Martin Pring, and he just did this over the weekend and talked about the dollar bear market is not a one-way street. And he actually says he, is looking for the dollar to rebound off of an outside day that we saw where we were much lower than the previous day, but then we came back up and we traded above that prior day. And he just pointed out that this could be a reversal in the dollar and then went through other currencies, foreign currencies, showing that they were exhausting on the top side. So I just wanted to point this out because you mentioned dollar. Of course, we talk about dollar quite a bit, but there are some really interesting articles. I think if you get in and you start getting to know many of these blog authors, and especially, names like Martin Pring, John Murphy, and so forth, people who've been doing this for a long, long time, it's worthwhile to take a step back and consider some of their opinions on things that are taking place in the market. And I thought the fact that Greg also was seeing the same thing, you've talked about it, Aaron, pulling back to the overhead. I think you talked about it yesterday when you were going through your decision point report. Technicians are seeing these levels, and they are important levels. And so I just want to make sure that everybody realizes, because if the dollar bounces from here, things start to change. I mentioned yesterday that this falling dollar is really helping the larger multinational companies like the S&P 500 and the Dow. And if we actually find support here and start to bounce, we could start to see some of this money rotate back into the small cap Russell 2000 index. So that was just kind of following through on some of the things we've talked about. I noticed the others were writing about the same thing, and I just wanted to make sure we shared that with our viewers here.
Yeah, and I know we are hitting that area of support, and interestingly, gold has hit some difficult overhead resistance, in my opinion. So I had moved bearish on gold. Oh gosh, I think Monday for sure. I was talking about that when I did my decision point report yesterday. So it is timing wise a good time to maybe see a little bit of a bounce in the dollar. I don't know if it'll continue. I think once gold has managed to pull back and is ready to make another move up, I would be looking for the dollar to maybe have some weakness at that point.
Mm-hmm. Well, and that's a great point with gold, because that was one of the correlation examples I gave earlier, where the dollar and gold tend to move in opposite directions. I mean, that they are inversely correlated. And so one could assume that if the dollar does find an area of support and we start to see a bounce, even if it's just a short-term bounce, that would likely have a negative effect on gold and some other areas that we talked about, like some of the larger cap multinational companies that have been going straight up. They've been going up for a number of reasons, but one of the reasons they're going up is that the dollar has been falling so rapidly that these foreign currency translation gains can be very significant, some of their earnings reports. So all of that needs to be taken into account, and all of this intermarket, all the intermarket relationships that John Murphy has written so many books about. It's really important to understand. It's not just looking at CNBC and saying, "Oh, Disney's up" or "Disney's down" or whatever. It's there's a lot that goes on, under the surface that you need to understand about the market, and this is certainly one of those relationships.
Absolutely.
All right, I'll just go ahead and move into, or do you want to move into the what would you do?
Sure. Okay, yeah. Let's ask the question. So the question is going to be about UNH, United Healthcare. Yep. And the question is, of course, whether you're going to buy, hold, or sell or short. Now, I know we've given everybody the leave it alone option, but I think that's a cop out. I think we should all have to do one or the other. So we'll see. But go ahead and take a look at that chart and, make your notes, and then you can see what each Tom and I would do. And I have no idea what he would do. So it'll be interesting to see if we line up or whether we don't.
Would you like to pull the chart up and show the PMO?
Sure. Let me get my chart ready so that when I give you the screen, you're going to see the right thing.
Okay. I mean, I could pull it up if you'd rather. I was just going to see if maybe you want to take a look at the PMO.
Sure.
Okay.
All right. Actually,
while we're waiting, by the way, I do want to mention, we've had a lot of difficulties here over the past couple of days with our stream. Trust me, we are working tirelessly trying to figure out everything. There's a lot of different possibilities of what's going wrong. We're talking to our service providers. We have checked everything out at Stock Charts. We haven't been able to locate it yet, but just, first of all, be rest assured that we are looking into this. This is very important to us, and we're trying to get everything figured out. So we appreciate your patience. And the second thing I want to mention is that the recordings are not impacted. This is really just a live feed issue. So it has nothing to do with the recordings. If you listen to the recording after the show, you won't experience any of these issues. So on future shows, if you're having problems, a lot of times, if you come back in and you're still having problems, just know you have that recording that you can go back to that will not have any of these issues. And we'll continue to work on that. I just wanted to mention it because I know we have gotten a lot of feedback both in the chat room and in surveys about the issues, the issues that we've been experiencing the last few days. And we have definitely been looking into it. Trust me, we're trying to get this all figured out.
Yeah, big time. Because we know that it's very annoying for all of you. And honestly, a little bit for us too, because we can't see the comments so much because everybody's, I can't see you, I can't hear you. So it hopefully will be all cleaned up eventually and soon. So anyway, here is the UnitedHealth Group chart. And as you can see, here's what's going on with the PMO. And I can tell you by looking at this chart, it didn't top until today with this gap down and move down. So honestly, there wasn't a whole lot of warning here that this might happen. So this is what I'm looking at as far as that PMO, and that's very bothersome. But, I thought it might be interesting to look at the actual index industry group. And the same thing, you got the gap down, and that has pretty much tipped that PMO, yanked it downward. Not a sell signal yet. Very interesting, I thought. And OBV still looks rather healthy here. So I'm not sure exactly what I would do here. I think based on what I'm seeing here, if I had been holding it and we got this deep drop like we are, I would be tempted to hang on to it just because we're very near this area of support. But looking at this chart now, you've got the current last price for UNH is above the 20-day EMA. So honestly, I might take that advantage to bail because, yeah, there's this support level, but there's also the 50 is much lower. The PMO is just completely overbought, and we're getting that top on it as well. I could make a case for holding if you were an intermediate term trader. And looking at the OBV, I could make a case too for holding it if you still had it. But for the sake of the segment, I would have to say that I would be on the seller short side here, just because now that I've got a price level that's above the 20, I would probably take advantage of that if I were already holding it. So I would say sell. But honestly, I don't think I'd go short it yet because, we are getting ready to hit this area of support. So I certainly wouldn't get in based on the PMO, even though we've got that nice drop and maybe you can get some support there. Based on this PMO, it wouldn't fit my criterion to get into something. So I can't at all say that I would buy it. I would be tempted to hold it as an intermediate term trader, and I think you could do that. Maybe set your stop a bit lower if you're intermediate term and, if you got in months ago, like some of the intermediate term traders like myself do. And that's when I would start worrying about it. So I'm going to go under the sell or short area for the sake of today. So anyway, that's my thought. And now I would be interested in what your thoughts are and what your vote would be.
My vote is definitely a buy. I think that this is a group that needed a pullback and had news this morning that allowed it to pull back. I think a lot of the stocks, and especially you can see UNH gap down. It's got a hollow candle. So since the open, we have been seeing more buying, which is really what we've been seeing not only throughout most of January, but if we pull up a weekly chart and go back the last few years, you're going to see this is a stock that has been consistently moving higher and higher and higher. And on the most recent highs, I see the PPO continuing to move to the upside. So I think that the momentum remains strong, both from a daily perspective and a weekly perspective. And I think that pullbacks or news items like this are opportunities to get in on pullbacks. So I would be more in the buy category. Now, from a, looking at different price levels, if I was more of a longer term trader, I'm not even going to say buy and holder, but if I was, just a position trader holding as long as the stock continues to look good, I think you've got the rising 20-week moving average, which is right now at about 220. And you've got the recent low pullback that came back to about 220 as well. I think we've got really good support there from a more intermediate term basis. Now, as a short-term trader, I would be annotating this and looking at the breakout that we had with earnings and that heavy volume and accumulation. And so I think this 229 area is very important. You've got great gap support here, and you've also got a prior price high, which now actually a couple of different price highs that now should act as pretty good price support now that we've broken through. The other level I'd put maybe is the top of this gap support. You can see we actually gapped down today and tested it at the open, and we continue to rally off of it. So we're seeing the same type of buying action here that we saw the last time we had gapped up with earnings from this level. So this is an area I think that's really clear as support in the short term. And I think as long as UNH holds 229 to 232 area, I would be okay on the long side. So I would be a buyer.
All right. So your answer is buy / hold, and mine is sell / short. Always interesting when we have different ideas. And I can totally see your position because it is a very strong area of support. So I definitely am with you with that. But like I said, for me, I can't be a buyer just because the PMO is the way it is. But yeah, looking at that RSI, has moved down. I mean, I can certainly see I can see your side of things. So
yeah, and I think too, when you're looking at these momentum oscillators, whether it's the PMO, the PPO, the MACD, or whatever, I mean, if you go back and look at history during uptrends, a lot of times you get these oscillators to unwind and to pull back during periods of consolidation, not necessarily selling. And I mean, you could look back in December here, and I'm just looking at the PPO. I'm assuming the MACD and the PMO may have done similar things. But here on this pullback, we really didn't. It wasn't a great opportunity, I don't think, to short the stock, yet momentum oscillator was unwinding throughout this entire period. Same thing back in October and November. We made a move up, and while we were sideways consolidating, you see some of these negative crossovers, these bearish crossovers, but they're all occurring above the center line. And so I think we could sideways consolidate. We could see a weakening PPO or MACD, but that doesn't mean, for me anyway, that I would be a sell just because I'm still holding on to price support. And for me, that's number one, that combination of price and volume. And some might say, well, it's down today and it's on heavy volume. My answer would be we haven't lost price support. So I think as long as it continues to hold, and I'm going to say 229 on you from my perspective as a short-term trader, 229 I think is pretty critical. A little bit longer intermediate term trading, I could go back to that 20-week moving average on the weekly chart down around 220. But 229 for me would be the level I would probably keep a tight stop.
Yeah, interesting. Yeah, I mean, I'm looking at, in fact, I'll share it since why not, my screen here with UNH again. Yeah,
I'd be interested. I wasn't paying attention, but on on the PMO, I'm assuming, during the last couple of periods of consolidation, and I think you had answered a question in the chat room earlier, I saw that sometimes that PMO will come down during periods of consolidation. It's not always, the
There's
market pulling back.
right there.
Yeah.
Right here you can see. So yeah, it can be consolidation. And honestly, let's face it, Tom, I mean, having serious bearish expectations to a point where you would short something, I don't think is wise right now with the strong bull market. It just doesn't make sense to me, but to each his own. I mean, if that's what you like to do, that's what you like to do.
I can't even tell you the last time I shorted a stock.
Yeah. And, looking at well, what would you do? Yeah, we need to move along. So buy, hold, sell, or short. So Tom's position was going to be a buy, hold, and I'm going with sell, short. And wow, the audience went with me. So
well, you're hot. You've been hot lately. I mean, you're getting everything right. So
I'm looking really smart. I know the time will come when, it happens to all of us.
Maybe I should switch.
Oh, yeah. And somebody just said, couldn't you ignore that PMO sell signal if it's above 2? Sure, you could. And I've told people many a time when I'm holding an investment, I do not use the PMO as far as getting out. Only I'm looking at those support levels as well and the EMAs. And so that does hold more weight. But if things are looking shaky, like they are on UNH to me, and I'm seeing that top and overbought territory on the PMO, I would start to get a little bit concerned. But honestly, as an intermediate term trader, I think you could certainly make a case for sticking it out a little longer, given how strong this bull market is.
Yeah, no doubt. All right. Well, we are just a few minutes away from wrapping up. Any final thoughts for today? I mean, we're seeing a lot of selling, first time in a long time. I mean, does this change the way you look at the market at all?
Absolutely not. And in fact, a lot of people in the chat room earlier in the day, there's some nerves out there. Things are going in a different direction. But, we've all talked about it on this show. You guys in the chat room as well need a pullback. And so let's watch this pullback. And yeah, you're going to probably incur a little bit of loss along the way, but we need to get there so that we can turn it back around and start moving up without getting too ridiculously overbought.
Yeah, I think that short term, we may have a little bit more of this volatility, but because of the money flow, we got a Fed meeting tomorrow. Well, a Fed meeting today and tomorrow with the announcement tomorrow at 2:00. I would not be surprised at all for the Fed to talk about the strengthening economy and talk about rate hikes down the road, which could encourage some more selling in the bond market with yields going higher. And where is everyone going to put their money if it's not in the stocks? I mean, with a strengthening economy and with rates, even though they're on the rise, they're still pretty close to historical low levels. It really is a nirvana for the equity market to see strengthening economy, low inflation, and pretty low historical interest rates. So I can't help but continue to be bullish at this point. And none of my relative ratios that I follow are breaking down. I mean, outside of maybe small cap stocks underperforming, really there hasn't been too much to really talk about from a bearish perspective. So I'm gonna stick with the bullish side of things for now, despite all the selling that's taken place today.
Yeah, I certainly can see that point. And I'm just sharing my screen real quick again to show everybody the climactic indicators. Like I said, when I see that kind of a dip below that lower Bollinger Band, you can see here we got those dips back here. And usually you're going to see a little bit of a bounce off that. So honestly, in the next day or two, I would say even maybe tomorrow, we'll probably start seeing things move back up. I mean, look at this level of support right now for the S&P. We're pretty much right on it. So I'm not worried.
Yep. Well, we got some good stuff coming up later this week. So I think maybe we share those announcements. And of course, I'm going to let everyone know that tomorrow is your birthday.
Yes.
As a present here on Market Watchers Live, we have your father coming in to join us. So that's going to be a fun show tomorrow.
Yeah, he's going to be great. I'm definitely interested in what your thoughts are on what he's talking about. It's going to be a lot of fun. He's got some great topics. It should move very quickly. Can't wait. And then Bruce Fraser's coming in on Thursday. And Friday, I'm going to be doing my workshop on how to sift through your scan results. So it definitely packed, got a lot more to go. And again, super blue blood moon tonight or tomorrow morning, depending on where you're located, but 5 a.m. ish here on the LA side of things. So you might want to check it out.
There you go. Again, I do want to thank everybody for having patience over the past few trading sessions. We know we have some issues with the live stream. We are continuing to look into it, and I can promise you we are going to try to get a solution as quickly as possible. So just hang in there with us. I want to thank everybody for joining us today. Please remember to complete the exit or the survey as you exit. I'm sure you'll complete the exit. But we'd love to get your feedback to hear what you think of Market Watchers Live. You can find that in the lower right-hand part of your screen, by the way, under How'd We Do. Just click on that link. It's a very brief survey, and we'd love to hear from you. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. We'll see you back here on Wednesday. Happy trading.